What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did see a bounce across the board, but we are still stuck in a consolidation wedge and we have no decisive breakout in either direction. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 0.34%. And intraday, it did look like we were starting to get that bull breakout above the 20 simple moving average, but as you can tell from the closing candle, we did close below that negatively sloping 20 simple moving average. So unfortunately, there was nothing in the price action that gives us any more clarity on which direction we're going to break. And if I draw another resistance trend line, you can see we are getting in very tight wedges, and there are wedges all over the stock market right now, which does tell us the next move in the market will be very impulsive. We just don't yet know which direction it's going to break. So if you remember my preferred scenario from last night, it's actually starting to play out as of today because I did tell you to expect a rejection right around 384 to 385. And so far it does look like we're getting that rejection around 385, which does mean if we get my preferred scenario that we will come down here to about 370 or fully close the gap right around 369. That will look like a bearish breakdown from the wedge. There will be a lot of bears that pile into short positions once we get that breakdown, just in time for it to all be a bear trap before the next face-ripping rally that takes us all the way up to close the gap right around SPY 401 and possibly even higher to retest the previous daily high at 418. Now remember, this is the scenario that I prefer, but the stock market does not care what I think, so just because I prefer this scenario does not mean it's actually going to happen. And before you laugh at me, don't forget the stock market doesn't care what you think either, and that is why we follow price action with an objective trade plan, and we always let price action do all the talking. There's no reason to trade just on a gut feeling. Even though I am prepared to fully trade any scenario, this is the scenario I do think will play out. However, there's still a very valid bull scenario where we just continue to go higher from here and we don't actually get the bear trap pullback. In that scenario, we're already well on our way to getting the bullish breakout. We should see the bullish breakout as soon as tomorrow and then start higher to fully close that gap, but there will be bears waiting at that gap close because we are still in a bear market and this is still a very strong downtrend, so there's no reason to just expect the bears to walk away from a bear market and stop shorting at resistance. So you do have to remember, if you zoom out, we are still in a downtrend, we are still in a bear market, so there's no reason to get overly bullish on any bullish scenarios. The bulls have everything to prove and the bears have the advantage of the trend. So we are always going to let the bears have the benefit of the doubt until the bulls can break out, which will require the breakout of this previous high just above about 394. Now the obvious bearish scenario, while we do have the bear market in the bear trend, is that we do make that next leg lower and hit that price target at 350. Which will mean that we slice right through that gap at 369. That level at the gap fill will likely only lead to just a short dead cat bounce before we continue lower. Now keep in mind, there are lots of scenarios that you need to understand, and that is why I teach following price action, and that is why on the Stocks channel Discord we are very disciplined about trading around risk and reward levels, and we don't just blindly follow an idea. So all traders eventually realize that they do need to learn how to trade with price action, and that is why I always teach following price action and trend right here on this channel. So going into the rest of the week, you need to know all of these scenarios and you need to know the critical levels, and the first critical breakout for SPY will be closing back above this 20 simple moving average, which is currently just below 384, and then we'll need to get all the way back above 390, and our strong resistance trend line is right around 395, and then the gap fill is at 401. Now, while we're in a bear market, there will be bears at all of these levels. That's why you should have the expectation, as long as we have the downtrend, of lower highs and lower lows, which means there is no guarantee we need to break above any of this resistance. That is why I tell you, you need to let price action prove it. So today, price action proved absolutely nothing other than the fact that we didn't have any bears slicing down through support at 380. So if you are a bull at this level, you need to set your risk level at 380, because if we break down below 380, it is very likely that we're going to 370 or 369. And if we break below 369, it's very likely that we're going to 350. So you need to know all of these levels and you need to have a plan that acts accordingly no matter which levels break, whether it be the resistance levels above or the support levels below. You should know exactly what you're going to do in any scenario. On the NASDAQ 100 triple Qs, we were up 0.64%, and the triple Qs did close back above 3 of our 4 moving averages, with that close back over the 20 simple moving average and that resistance at 287. So without a doubt, that is a bullish development, and we did close right on top of that resistance trend line, which will decline each and every day because it is a negative slope. So by tomorrow, critical resistance will be both the resistance trend line and the resistance level at 287. So if the bulls can hold support at 287 with tomorrow's price action, it is very likely that they're going to start marching up towards that gap at 299 and start to battle the giant bear up there. Now keep in mind that bulls are going against the trend. They are going against the odds of all resistance and trend favoring downside and favoring short sellers. So there is the possibility that even the bulls know that they are not yet ready to battle the big bear up here right around $300, and they aren't going to even bother trying. They might want to go down, favor that scenario that I prefer, gather up a bear trap to trick some of the smaller bears that have absolutely no idea how to trade the stock market, and then short squeeze them, recruit them over to the bull side as they're covering their short positions, and then go to battle that bear with a lot more momentum and a lot more warriors to kill the bear with. So if you visualize the psychology of trading, the bulls know they are not ready and they are not strong enough to go battle the bear just yet, but they may go try to do so anyway, and I don't expect the bear to lose that battle unless we get the bear trap before we go higher. So as you can tell, I do favor the scenario that we go lower before we go higher, but again, the stock market does not care what I think. So if we do start holding above 287 as soon as tomorrow, do prepare for that battle at 299 to 300. And if we get above that, you're looking for the full retest of the previous high all the way up here right around 315, and that should put an end to the bear market, totally reverse the downtrend, and send the bears back into hibernation if the bulls break above that level at 315. So there's a lot to pay attention to over the next couple of days, and it's going to be a very exciting market to trade. You just don't want to be caught on the wrong side of the trade, so you need to be patient and disciplined and wait for the breakout. So the breakout for the bulls tomorrow is going to be holding above 287, and you're going to see it very apparently because it will be obvious. Otherwise, we're breaking below 287 and coming back down to the support trend line right around 279. And below 279, we're retesting the low at 269. And below 269, you're getting that next leg lower at 258. So as I always say, know all of the scenarios and then let price action guide you on which one is playing out. Set up your risk reward trades accordingly. Use proper risk management. And if you're patient, you are going to be on the right side of this trade because you know exactly which way the market is going dependent on the breakout of the price action. So good luck, follow these levels, and do understand too that all of these moving averages are all bunched up at 286. So that is a very strong support level for the bulls currently because price action is above that level. In the Dow Jones, we were up 0.23%, and the Dow Jones did not close above the 20 simple moving average and did not close above the resistance at 311. So it's still all of the favor goes to the bears in the downtrend because the bears are still at that level at 311 and can still drive price action back down to close the gap around 299 or send it back down to the previous low at 297. If the bears win this battle and break 297, the next leg lower will be at 285. And if the bulls start breaking above 311, the next resistance will be above at 318, and then the full gap close at 323. And anything above 318 to 323 will be considered a bull breakout. So as you can see, everything is wedging and consolidating, getting ready for this next leg in the market. All you need to do is follow the price action to ensure you're on the right side of the move. In the Russell 2000 IWM ETF, we were down 0.74%, so the small caps are still looking relatively weak and still have price action closing below all the moving averages, but still holding above support at 170. As I continue to tell you, the bears have the advantage of the trend, so they are showing up at all of this resistance. So they will try to break support at 170 to send IWM back down to retest low at 164. And if the bears are successful, they will send it down for the next leg lower at 156. Bulls need to break above 175, then get back over the 50 EMA at 180, and then fully close that gap at 184 and hold the bullish breakout. So as you can tell, there's battles going on in these consolidation wedges between the bears and the bulls fighting for control of this market. And remember, the bears still have all the advantage of the trend, so do not expect any bullish scenario unless price action confirms it. On the ARKK ETF, we were down 2.25%, with ARKK clearly getting rejected at that resistance at the 50 EMA and coming back down near the support right around the 5 EMA and the 20 simple moving average, which is right around $42. If ARKK breaks above 47 for 2 consecutive days, it will likely finally end the bear market. but we'll need to wait for that confirmation before we say this bear market is over with. So far, it does look like this could be some type of inverse head and shoulders, but we'll need to break out above that neckline at 47 for any confirmation. Any rejection from here could send us back down to about $40 or the previous low at 36.5. And as long as we are below this negatively sloping 50 EMA, we still do have a valid price target at 33.7. On the VIX, we were down about 3% today, and the VIX is getting very close to our support trendline, which does tell us we could see a spike in volatility yet again once the VIX reaches 26, and we are only one day away from reaching that level. If the VIX breaks below 26, we still have strong support on the VIX right around 24, and if the bulls can get the bullish breakout, we will likely see the VIX getting crushed down below 24, and that will be a bullish signal. Otherwise, look for volatility to come back into the market very soon with the VIX spiking off of 26 and breaking back above 30, and that will give confirmation of the bear market to send us down for that next leg lower. On Bitcoin, we're currently up 1.1%, and Bitcoin is still stuck in consolidation between 19,000 and 22,000. And again, it's a very simple trade. You're either waiting for the bull breakout above 22,000 for the retest of 25,000, above 25,000 will retest 28,000, or you're waiting for the bear breakdown below 19,000, which should send us back down towards that price target at 12,000. Now keep in mind, Bitcoin is very, very oversold, and it could be due for a relief rally, so I do favor that the bulls should be able to gather enough energy to at least retest 25,000, but if you want to be safe, just wait for that breakout above 22,000 and then act accordingly. On NVIDIA stock, we were up 1.1%, and NVIDIA did close back over 150, which, remember, this is our downside price target that we did exceed because we did go as low as 141. We're still getting rejected at all of the moving averages, and they're still acting as resistance, and we still have the strong bear trend. So while we do have gaps to fill to the upside, we cannot rule out the possibility that we are going to go lower before we go higher. So if we do break back down below 150, you're looking for a retest of the low at 141, and the next price targets at 130 and 125. However, if NVIDIA can hold 150, we do have resistance at 156 and the gap close at 159. And if we can break back over 161, we will be looking a lot more bullish and could possibly go close the gap at 180. So this is a very strong downtrend, and there's no evidence that the bulls are breaking the downtrend just yet. So you either need to take on risk for the long term because you're bullish on the stock as a whole, and these are great valuations, or you need to wait for that breakout back over 161 to get more bullish. On Tesla stock, we were down 0.57%, and you can clearly see Tesla is still struggling to break and close above that resistance at $700, and we are still in a very tight consolidation wedge. Eventually, we are going to see a clean breakout of this wedge. So the bull breakout above the wedge will be above 745, and the bear breakdown below the wedge will be on a break below 654. The middle resistance is still 700, so you can get more bullish above 700, but you will have strong resistance just above around the 750s. And the next bull breakout above the wedge will be the close above 775. Now keep in mind, Tesla is still in a bear market and still in a downtrend, so it's very likely that we are going to make that next leg lower. So if you do get the bear breakdown, watch for support at 620. And the next leg lower price target at 571. On Apple stock, we were up 0.96%, and Apple did start to look like it was getting a bullish breakout above 143, but did not close above 143, which would have been the daily higher high. Now on closing prices, the last closing price was below 142, so we did close above that level. But as with any breakout, one day is not enough. We need to see a second day of follow through. So if we can see Apple closing above 143 tomorrow and testing this resistance successfully at 145, then we could start to develop a bull trend in Apple that could send the indices higher as well. So while this does clearly look like a bull breakout in Apple, we need to see follow through, and the bulls still need to prove this is not just a short-term win in a short squeeze. We need to see something material developing, clearing some upside resistance and developing that bull trend, and then we can get more bullish for that gap close all the way up there at 174. So critical resistance now is right around 145 and then 150. But we do need to hold this critical support zone right around 141 to 140. Otherwise, this was just a false breakout, and we're still going lower to close the gap at 133. Keep in mind, in my preferred scenario, we were going to get this fake out for the bulls, and then we'll get that bear trap, and then we will likely get the impulsive bull rally. So do not rule out the possibility that we need this bear trap to get this sustainable bull rally, even though right now price action is saying this is a breakout. So if we do get follow through, we instantly need to become more bullish. On the financial sector, we were down 0.25%, and we can clearly see another tight consolidation wedge in the financials. So get a lot more bearish if we lose support at 30.8, and get a lot more bullish if we can clear this previous high right around 32.3. And we still do have that gap to fill right around 33.7. The industrials were up 0.58% and again consolidating with the bear trend, so we could still be going for that next leg lower, and we can get a lot more bullish if we get the close above 89. We have two gaps to fill to the upside, but we also have gaps to fill to the downside, so you need to let price action guide you on which gaps are going to fill first. The healthcare sector was up 0.67% today, confirming the bull breakout yet again with the daily close above the 50 EMA and the resistance trend line, so it does look like the healthcare sector is trying to develop a bull trend, which should be very evident very soon when we break above 131. The energy sector was down 1.71%, breaking down below $70 and confirming the leg lower, going back down to that support at 66.5, and so far it does look like there were buyers at that level. We have the confirmed bear trend, which was very obviously coming, and we still do have two gaps to fill to the upside, so if we continue to get too oversold, it is possible we're due for that counter trend rally, but right now price action and trend are screaming it's still very bearish, so be very careful trying to catch a falling knife. So jumping back over to the S&P 500, while I know these consolidation wedges can be very boring and you're just dying to know where the market is going from here, I assure you that if you are patient and you wait for price action to confirm where we're going, you're going to have a much better time trading this market. If you're automatically guessing we're going lower or going higher, that's just fine, but you need to have very well-defined risk levels that you know where you're going to exit in the event you're wrong. Don't just go with a gut feeling with no idea where you're exiting that trade once you're wrong, because that is the surefire way to make sure you blow up your account before the end of the year. Have patience, have discipline, have a very solid trade plan, and always use great risk management. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel and Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.